The monthly inflation indicator for May has just been released by the Australian Bureau of Statistics. Let's take you live now to our business reporter, Edward Boyd. So, Ed, did inflation fall to that, I think it was 6.1% that was being expected?
That was the expectation. Inflation has actually fallen more than that. It's come in the month of May at 5.6%. So quite a bit lower than what economists were predicting. So good news here, basically showing there are price decreases across a broad range of categories in Australia's economy during the month of May. But there is a caveat here with the Bureau, with the ABS's data. They do say if you strip out they've stripped out volatile items and one-off high-cost items during the month of May, which has resulted in the 5.6%. So you can see April it was 6.8%. So inflation over the course of that month has actually decreased significantly. So the ABS say the most significant price rises were housing, food and non-alcoholic beverages, along with furnishings, household equipment and services. However, that was offset by automotive fuel falling by a massive 8%. During the month, over the 12-month period to May. So here's what CPI inflation has done at an annual rate. Looking back to October last year, you can see it was hovering around 7%, went up on a monthly rate to 8.4% in December. That's when we kind of know that inflation started to peak and slowly started to cool off. You can see February it was 6.8%, then March 6.3%, but in April it actually surprisingly went up again to 6.8%, which was a big shock to the economy, caused some bit of problems for the stock market and the Aussie dollar. But now, the month of May, we're seeing a steadier decline down to 5.6%. So it is good news here, showing a steeper decrease than expected, Ash, for the monthly rate of inflation. It's worth noting again that this is just an indicator. It's not a totally accurate representation of where inflation and CPI is in the economy, but it is still a good sign to see it at 5.6% instead of the 6.1% that was originally expected.
So the big question now, I guess, Ed, is what the Reserve Bank is going to think of these numbers. They're meeting next Tuesday. What do you think they'll do?
This is a short time period between RBA board meetings. Normally it's about 5 weeks. This one's only 4 weeks, just due to the way the months and dates have married up for the July board meeting. So the RBA will look at today's numbers. They'll probably be quite pleased to see inflation falling more than expected to 5.6%. But however, inflation is still, here's some of the categories. You can see food was still up 7.9% on an annual basis during the month of May. Housing costs still high. We know rents are really high for people at the moment. We know property prices have actually risen for 6 months straight this year. So housing costs up 8.4%. And transport costs up just under 1%, and automotive fuel is included in transport. We know automotive fuel went down 8%, so that's probably why the transport increases are less than 1% over the course of the 12 months to May. But the RBA, I think they still have in their sights at least 2 more cash rate increases for Australia. They've lifted the cash rate 12 times since rates began rising last year in early 2022. We've got the cash rate at 4.1%. A lot of the big bank economists and economists at investment banks believe we're going to see the cash rate at 4.6%. Some people believe 4.85% is where the cash rate will end up this year. So I think the RBA is going to look at these numbers today, and then the retail sales figures, which come out tomorrow for the month of May, to really show us. They'll give us a good idea of where consumer spending has been going. We know retail spending has basically been flat for the last 6 months. So the RBA, I believe, are still going to lift rates next week by another 25 basis points to bring the cash rate to 4.35%.
Okay, and what about the Aussie dollar? As we know, the dollar's been one of the world's best performing currencies this month. How is it actually faring after that release of the inflation figures?
Yeah, the dollar's really been gaining value against a range of currencies around the world. So before the decision, it was buying about 66.6 US cents. It's obviously pared back slightly to 66.3 US cents. So a little bit of a fall for the Aussie dollar. That would be expected. If we go to the next page, we can look at the ASX 200 chart, the local stock market, and you can see here that big ski jump there at the end of the chart is bang on 11.30. So obviously the market is pleased with today's numbers, basically showing inflation has come off more than expected. The market was up about 0.7% before the numbers came out. Now it's up over 1%. So market clearly liking today's figures from the Bureau of Statistics, and they are obviously important figures, Ash, in the context of interest rates that we're going to see next week from the Reserve Bank when they meet on Tuesday.
Ed Boyd, appreciate your analysis. Thank you for that.